Good afternoon, everybody. Welcome to Trader Merlin for your Tuesday trivia edition of the Trader Merlin show. Over the past couple days, we've been talking a bit about Target, a couple trades that I was following, and actually one put position that I sold on Target, just is keeping you guys in the loop on what I was doing trade-wise, and a lot of you going, you're crazy. Some of you saying, all right, I'm okay with that. And then, of course, today you saw the news about Target closing 9 stores. 1 in New York, 2 in Seattle, 3 in Portland, and 3 in San Francisco. And, of course, that sent in several emails from people saying, oh, watch out, it's going to go away. It's going to go the way that Kmart went. So I thought, you know what, let's dive a little bit deeper into that and talk about the future of Target. Thank you, AI generation, for creating these wonderful graphics. This actually probably will look like what the San Francisco centers look like, which is boarded up windows because they've been pilfered and robbed. Now, let me start off with just explaining a little bit about why they closed those 9 specific centers. Now, granted, Target has over 2,000 stores across the United States, so probably going to be okay that way. Pepe, of course, got to make it political, don't you? It says Democratic cities. Well, conveniently, yes, those are Democratic cities, and I think it more has to do with some of the rules put in place by those cities. So, you can point the finger at which political party you want. Bottom line is, it's costing them a ton of business, and you guys have heard my comments about San Francisco. I love San Francisco. I think San Francisco is one of the most beautiful cities. It's great. But given all that's going on in San Francisco right now, you really couldn't pay me to live there right now. You've got rampant theft. You've got crazy violence. And you've got a drug situation going on that's over the charts. They've had 500 deaths from fentanyl alone this year, and the year's not even done. That's over 1 a day. So kind of crazy what's going on in San Francisco. At some point, I do believe that this will start to fix itself. Obviously, something's going to have to change, but by those centers leaving, San Francisco, Portland, Seattle, and New York, it sends a pretty big message to those city governments as well, which is, hey, you better change these rules, or it's not just our businesses that are going to be leaving, it's many others. Now, I know some of you are probably thinking, well, they're going out of business because of just bad sales and because of what Target did. They're going over the top on their pride stuff. That may be part of it, but from what you can see from San Francisco, and I don't know about Portland or New York, but just the way these stores are being robbed and there's really nothing that they can do about it, I'd leave town too. I would have left probably a while back as I realized I'm just not going to make a profit. So makes sense for it to see a change there. Kind of sad to see it happen and sad to see it go. Personally, I think that by those centers closing, I feel like it's going to get worse. The situation will get worse out there because the theft will just happen at other places and be more concentrated in those locations as opposed to spreading around. So really, really unfortunate that that's going to happen. But anyway, let's go. Believable Direction says, just watch the charts. I agree. John says, billions in theft. Yeah. And I told you this, that years ago I worked in a grocery store, and one of our favorite things, I thought it was code 11 if I remember correctly, but like a code 11 was, get your butt to the front of the store, someone's stealing something, you got a high-speed foot chase. And it was like a highlight of our day. Now, granted, I'm in my early 20s, so the thought of full-on sprinting and tackling somebody who's stealing from your store was exciting, adrenaline rush, a sense of pride, and you're like, good, stick it to that shoplifter. And nowadays, when you can sue for just about anything under the sun, not the best idea to have your employees chasing after these shoplifters. So at a certain point, a business has to throw up their arms and say, we're done, we're out. So let's look at, I'm sorry, I'm trying to read a bunch of comments that are coming through here as well. Got a whole bunch of stuff going. I know the future Target, but I took long puts a few days ago only because of the charts. Cool. Nope, sold Target puts this afternoon. I'm okay with it. And again, this is why I decided to do this show, because Big Gab, you mentioned yesterday you're okay owning it long term. I am too, to a point, right? There will be a certain point where you kind of go, maybe this is too big of a problem for Target to overcome. But let's just look at the numbers. Let's look at the charts. Let's look at the expectations. Look at earnings. And then make your opinion about what you want to do. And this is why trading works, because some of you are going to be bullish on Target. Some of you are going to be bearish on Target. And the truth is, over the intermediate term, you'll probably both be right at times. The ultimate victor is long-term down the road, and we don't know which way that's going to go. Now, keep in mind, Tom sent a nice email today, which I will be referencing for part of this, Tom. Thank you for sending that to me. Mentioned that, thought Target may go the way of Kmart. Well, remember, Kmart went out of business because of Target and Walmart, right? Target and Walmart were offering cheaper products, cheaper goods, and the big talk was that you had more trendier, hipper things at Target than you did at Kmart. And of course, they struggled and had to shut down thousands of centers across the United States. And now we're left with Target and Walmart. Now, the question is, will this be the nail in the coffin? Will this move to carry these, specific items that have enraged a specific portion of the population? Will that be enough to dissolve and force people to go shop at other centers and kill Target altogether? Well, that is to be determined. So let me real quickly look at, there's two comments that I added to our PowerPoint slides here that I want to just go through. Tim said, I live 2 blocks away from Target here in Reno, Nevada. It's just as busy as ever. I'll still shop there. Okay. And I thought I'd throw it in because, again, it's just a mix of opinions. And Tom said an interesting one. He said, there is something to supply and demand levels, but at some point, a company is no longer the same company. And I agree with you. Target may be fundamentally different. It's the question of how big of a fundamental difference is it? Is it the death fundamental difference? Target may be on their way of being Kmart, as they've alienated a portion of their clientele, and Walmart has stepped up their game, and e-commerce continues to grow. I'll be careful going long with Target, as will I, right? I right now have puts at 105. I sold puts at 105. If I get executed, I'm fine with that. I don't think I'll get hurt badly. It's not like Target's going to go bankrupt tomorrow, especially when you start to look at the numbers that they're generating. They're still generating a tremendous amount of revenue. Now, I believe that the big controversy for Target started back in March. So let's go look at TGT. And actually, no, it was May. I'm sorry. It's right here. It was right here that the controversial stuff was happening with Target with regards to their Pride line and the sneak away your wiener underwear, whatever the hell that was. I still don't understand what that was all about. Anyway, that certainly offended some people. And Tom's right. There are definitely people who are going to look at that and go, I don't want to support that. I don't want to shop at a store that is about that. Now, it's funny because you think about San Francisco, people are going, oh, they're closing their stores because of the backlash. Of all the cities in the United States, San Francisco is probably the most accepting of anything to do with pride, right? So I don't think that's what caused these San Francisco shutdowns. I do believe that was theft and just lawlessness that's going on in San Francisco. So let's go and look at from this peak here. So I will draw a line from May 23rd to where we are right now. Target at this exact moment is down a total of 32% since that incident occurred, since they started that, or since the outrage began and started making headlines. What I want to take note of, though, is Target was having some issues before that. If you go all the way back to its all-time high, which was back here on November of 2021, it was already down roughly 40%. Going into that issue. Right now, Target off of its all-time high is down, sorry, I'm trying to get the exact lows here, 59%. All right, 59% decline so far off of its peak, and that is almost 2 years, right? We're going on almost 2 years of decline. So that's the part of the bad story, is something was already fundamentally broken there long before this whole issue was raised with the conservatives and really upset a lot of people, right? Some people don't care. Others are upset about it. It is what it is. Your political views, it's yours. Let's not get into chat with that. What I also want to show you here is the earnings at the bottom, right? So our previous earnings for Target, $1.80 per share reported. I'm just going to do the last, year or two, just so you can see, has there been a precipitous decline from its peak with regards to earnings? And there has been. So you got $1.80 was the most recent announcement on August 16th. Previous one was 205, so declined a little bit. 189. So we're actually staying pretty much even for the past 3 quarters. Now here's where it got hurt a little bit. Down in November of last year, you had a $1.54. Before that, you were at 39 cents. Not sure what happened there, but that's an ugly one, the 39 cents. And then it starts to go back up into the 2s. Now, if we go into 2022, you're looking at 318, 303, at its peak right around 364, right? So at its peak was making $3.64 per share and had a share price of roughly $270. Today, its earnings are halved. It's making $1.80, so it's almost exactly half. Yet the share price is it's dropped by more than half. Right, you're down over 59%. So kind of interesting to see just those numbers. If Target was actually just getting slaughtered because of all this and there was a mass exodus, then I would assume we'll see at the next earnings report, which is going to happen on November 15th. We've got a little ways till that happens. Estimates are that it's going to slow down. We've got a 180 on the previous reported. Expectations are we're going to get $1.48. So the expectations are still we're going to decline a little bit on earnings. And then the question for me is, well, how aggressive is that trend? Does it continue on like it has been here? If that's the case, then there may be bigger problems ahead for Target. All right. Other pieces I wanted to look at. So, you know me, I'm not a big fan of analysts. I'm not a... hold on, there's all kinds of chats coming through. Tuck friendly, that's what it was. Tuck friendly. What? Anyway. Let's see. Maybe consumers figured out that Target is not that big of a deal. Walmart getting more on the e-commerce train. Amazon driving a lot of it. Target falling behind. Yeah, I think it's many things, believable direction. I don't think it's just this. Certainly, you're gonna get people who are upset about it, and that's their prerogative, right? You have a choice. That's the beauty of being an American. You can say, I don't want to shop there anymore. I don't want to drink Bud Light. I don't want to, wear Speedos. You have freedom of choice to do so. For a lot of people that I know, and we've had this conversation before with things like the NFL, where a lot of people were protesting and saying, I'm never watching this game again. 99% of the people that I know that were adamant they'd never watch the NFL again, they're over it. I'm having beers with them on the weekend watching the games, right? It kind of falls by the wayside, and maybe that will happen. Who knows? But I want to look at the analyst expectations. I'm not a huge fan of analysts. I think that there's an agenda there. However, I want to look going forward what their expectations might be for Target. Now, I didn't expect that many people to think it was going to be cratering, but I also didn't expect people to think it was going to be soaring like an eagle either. So let's go to this picture here. This is, where's this from? This is from, I want to give a reference to it. Unfortunately, let me real quickly bring up the site name here before I get in trouble for not having that up there. It's from, it's called TipRanks. So TipRanks has this. It's a subscription thing, but I just screenshot it real quick. Out of the 29 analysts that are covering this one, 13 have a buy recommendation, 16 have a hold. And I would expect there actually to be more of a hold, and rightfully so. I think a lot of what Tom presented to me would fall in that hold category, right? What's interesting is I don't see any sells. So you got 29 analysts, and not one of them is saying sell. Of course, they're probably long, so we understand there's a bias there. But look at the 12-month forecast. Now, you guys know I sold the 105 puts. They're saying that the worst analyst expectation is that by next year, getting into September of next year, that the low price of this will be 105. That makes me feel pretty damn good because obviously I sold the 105 puts, which means if it gets below that, I will... Believable Direction says, what is Jim Cramer saying? That might be the most important part. If anybody has the time right now, go to Jim Cramer's Twitter feed and search and see if he did anything with Target. That's the ultimate kiss of death as Cramer's going on that direction. So the analyst average expectation is $146.93 by September of next year. And then you got this outlier saying a high price of $190. Look, if I happen to get exercised at 105, I'll probably continue to sell calls against it. And if it gets to 146, great. I mean, this will turn out to be a great trade. Now, of course, there's a lot of things that can happen between now and a year. They could do something stupid again and alienate even more people. Honestly, I think what should be happening, not only with Target and also with Bud Light, is you stop talking about this story. You stop doing anything about it. You just let it hopefully disappear, and you go back to what you were doing, which is creating kind of nice products, getting people in your stores, and sell more items. There will be people who will forever never set foot in a Target ever again because of that, just like there's people who will never, ever buy Bud Light. I don't know if you saw the pictures, but you guys know Kid Rock. Kid Rock was like saying, screw Bud Light, and all kinds of curse words and shooting guns at it and encouraging everybody to boycott Bud Light. Recently, there's pictures of him drinking Bud Light. So ultimately, it's a talking point. It's a headline grabber for media. Some people will latch onto it permanently. I personally feel that the vast majority will go, fine, I need to go to Target. Like Tim was saying, I need to go to Target. I'm just going to go buy some stuff. All right, let me see what I got here. Can't believe I was so far ahead of the Bud Light and Target curve. Hardly ever drank Bud Light, and I shopped at Target. I don't mind Target. I'll have a Bud Light. I mean, whatever. I think part of the problem is you shouldn't force your views on others, but that wasn't their intent. I think their intent was to saying, look, we're supportive of everybody. It's the human condition. You can be who you want to be. You can do what you want to do, and some people just went, no, that's a little too much marketing in my face. So, let's see, what did Big Eb say about his? I sold the 105 for October 27th at 195. If I own at 103, I'm okay. Yeah, I think, what did I get? I think I got $1.12. So I sold the 105s. I got $1.12, but I also sold for October 20th. So you got a week later and you got a lot more premium. Probably fine. Good for you to doing that one. So I'm good down to 103.88 would be my average price if I got exercise. So let me bring up that target chart again, and I'm going to have to switch this over to a weekly because it gets kind of messy. It's been so long since it was down at these levels, and there you can see the lines I've got drawn on this one. Let me make sure this is 105, and coordinates, oh no, it's 106.105. So that's my level on target. Now, I actually thought we would see it kind of hesitate here at this area of consolidation that it had going back into June of 2020, but it knifed right through that, and certainly the notice of 9 stores closing is not going to help their bottom line. But then, is it? Let me ask you guys that. If you know that you're losing money on these stores because of theft and there's nothing you can do about it, do you keep those open and continue losing so it looks like you have more stores? Or does it actually help you out long term to close those stores and save those losses? Ultimately, that may actually be a positive thing for Target. I feel bad for the people that are actually law-abiding citizens and actually rely on these stores for convenience, whether it's Target or Nordstrom's or whichever city is leaving. Yeah, it's tough because some people rely on those stores in whatever neighborhood they're in. So as far as the trade goes, I'm still going to stay with it. I don't think that there's any real reason for me to freak out at this point. Tom pointed out 3 separate groups, and it was interesting because he says, you've alienated these kind of 3 groups. You have the mama bears, which are mothers of school-aged children, and I could see how a lot of them would be frustrated, upset, because now you got to explain all this to your kids and what does it all mean. You got the mamas with grown kids. I don't think you really offended them. I think most of the mom that have grown kids, young adults, are like, whatever, who cares? And then you say the young ladies with student loans, and that's certainly not I don't know if that's necessarily going to impact because of the choices that they made, but the student loan piece takes away discretionary income, as many of you have presented over the past couple of days. If you close a store that is losing money, cannot even earn you a profit. Correct, Les. It can't earn you a profit, but if you know that there's nothing that's going to change in that city, for example, San Francisco, I mentioned this before. I have a friend who is an electrician in this city, and I stopped following him because I can't take the pictures anymore. He would post every morning a video of his walk to work and just watching what looks like someone walked through with an AK-47 and took people out on the streets. There's just bodies everywhere, we're all drugged up, and some just standing there drooling on themselves, their pants down. It's heartbreaking. But what do you do? What do you do to clean all that up? Blue Direction says the Starbucks loan issue, or student loan issue, is Starbucks in danger too. I think Starbucks is more of an addiction. Right, coffee is an addiction for many people. That will probably suffer, but I don't think as bad. It's really more discretionary income. Now, granted, buying a cup of coffee is discretionary, but does that now help boost things like McDonald's, which has good coffee as well at a much cheaper price than Starbucks? Do those that are feeling the pinch because of these student loan repayments, are they now going to be a little more frugal in where they spend their money? Are they still going to buy coffee because they're addicted? I don't drink coffee, so I wouldn't know. I'm sure some of you probably would be able to tell me if you're a coffee addict. Or, do we see them move away from, more established restaurants and going towards fast food, or maybe even just eating at home? All right, well, if they're eating at home, does that now benefit Kroger and Safeway and these types of stores? The student loan impact is that people weren't making these payments, so they had all this extra money to spend. They were spending that money on discretionary income, so Target benefited from that, and certainly many others. And now that all of a sudden those loan repayments are starting back up again, they no longer have that income. And I think it's actually probably a worse case than that, because knowing the consumer spending habits and as poor credit managers as most Americans are, I know it sounds condescending, but it is true that most Americans are carrying credit card debt. That tells me that you're a poor money manager, right? If you're carrying credit card balances, you're a poor money manager. You should carry zero credit card balances at all times. You can run a balance, but pay it in its full entirety before your payment is due. That way you never pay interest. Otherwise, you're just throwing money out the window. So what will probably have happened is when these individuals who were making student loan payments were given a little forgiveness, you can hold off on those student loan payments, they now had extra money. And they probably went out and started buying more. Well, as soon as they start those payments back up again, that income which was being spent on discretionary things is now going to have to be put back into student loans. And in many cases, people will develop the habit, and now they're used to going to Target, they're used to going to Starbucks, they're used to spending this money now. Oh, we'll just put on a credit card. And it gets worse and worse and worse and worse. And that's my point. Talking Monkey says credit debt is getting worse, it is blowing up right now. Right. And I think that's partly due to this situation where you've had forbearance on a lot of things. People weren't, there was a period in 2020 to 2021, maybe in 2022, where they didn't have to make their rent payments, right? You had people not making mortgage payments, and all of a sudden, the dynamics of spending and saving were distorted because of the actions of our government and what we were told we could spend on and not. So I think you're going to probably see that getting worse and worse and worse. Big M says, Mike Keurig at $30 per coffee, 30 cents per coffee is just fine, thank you. Yeah, and by the way, if you are using a Keurig, this is where you have to kind of, I don't know, when we talk trading, right, I'll map out a setup. If it doesn't work, it doesn't work. But I'm really waiting for the setup to happen. Look, I'm a Costco fan. I don't drink coffee, but my friend who drinks Keurig, she will wait until it goes on sale, which is a smart move. And when it goes on sale, you buy it because now it's even cheaper. It might go from, as Big Eb says, 30 cents. Now it might drop to 25 cents. And while it seems trivial that you're saving a nickel per cup of coffee when you're drinking 100 cups of coffee a year or more, all of a sudden these numbers start to add up significantly. So, will Gavin Newsom replace Biden as the Democratic nominee? I don't know. I don't want to go political, but given what's going on in San Francisco, I would find that kind of hard to believe. I don't know. Let's see. Sears had brand like Craftsman, Kenmore, Die Hard, and had value. Target is just retail. Yeah, Sears did have a lot of cool stuff. I think that Sears' big mistake was, number one, location. They were only in malls, which malls started to go by the wayside. They also, I think, did a poor job of marketing the Sears catalogs and things like that, but why did they fall out of business? I don't know. As long as I can remember, when I was a kid, I used to go to the mall in Santa Rosa, California, and to get into the mall, I had to go through a Sears, and it was always empty. Always empty at Sears. I guess different prices for everything else. Starbucks is overpriced bad coffee. It's for people that want status. I like to make my own coffee. Yeah, I don't even really like to drink it. Not my thing. I couldn't make any coffee comments. Although I could talk about the price chart of coffee. All right, so the facts are that Target is slowly declining on their numbers. And here is another couple charts here. I want to just show you the revenue of Target, just so we can kind of see these apples to apples kind of. Sorry, I know I'm going to have this thing at the bottom. I'm not going to disable my ad blocker. But notice their revenue for 2021, $93 billion. 2022, $106. 2023, $109. Now, right now, it's slightly up over the last 12 months, but it looks like it's going to decline this year. And here is part of the reason. Here is their trailing 12 months of revenue. Yeah, this is, I believe, let me zoom out. I think this is total revenue. Let me make sure. Yeah, this is on revenue. Now, notice what's happened right here. In the last few quarters, you're seeing last few bars, you're seeing it start to roll over, which would make sense given the fact we're seeing earnings decline. We're also seeing share price decline significantly over the past year and a half. Most of this is rolling over quarterly, but it's not plummeting. What is concerning is year over year quarterly growth. We're seeing now a contraction in this quarterly growth for Target in the most recent quarter. And I think a lot of that does have to do with the pride stuff and those issues that went on back in March or in May. So there's that. Let's go look at just overall earnings for, let's go to net income. They have nice charts here. This is a site called macrotrends.net. All right, so looks bad on the monthly, although it did tick up in the previous one. You can see quarterly, looks pretty flat. And then year-over-year quarterly growth, I'm not sure what to make of this one. 356% in this quarter. Something that must be a one-time payout, one-time distribution. I don't know why that one's going on there. Didn't Sears pass up buying Amazon for like $100 billion? I don't know. I thought it was the other way. I thought Amazon was going to buy Sears because now that we'd have a retail mall distribution type of channel, but who knows? Okay, so I got my target stuff out of the way. You know, it doesn't matter to me whether you think it's the worst company in the world, the greatest company in the world, or somewhere in between. The bottom line is, how are you going to make money off it, right? If you are a believer that the future of Target is this, just bankruptcies going the way of Kmart, well, then you might want to think about building yourself a long-term put position, whether you're going with leaps on that thing, or you're just outright going short the shares. To go for it. Although I would say make sure you have a stop loss in place in case you're proven wrong and this thing starts to rally back up. As we just saw, many of these analysts forecast much higher prices for Target over the next year. Of course, analysts are typically wrong. Now, if you are bullish on this, and I will say, I'm bullish on Target long term. I think that this is just an unfortunate chain of events that's impacting them. I could be wrong. So I'm kind of intermediate. I feel like choppiness. I feel like over the next 6 months, it's going to be rather choppy. But I think long term, talking year, 2, 3 years out, we'll see prices higher from here. So I'm okay owning it at 105, and that's just my plan. And of course, if I'm wrong, then I will cut my losses and move on like I do with all my losing trades. Old Sears stores could be used as Amazon distribution centers. Right, that's what I remember hearing, but it never really happened. Let's see, what is this? Where's Dwight comment? I'm long on Visa. If people are using more credit, why is Visa dropping? It's a good question. Why is Visa dropping? Let me get to that one just a second. I want to make sure I got all this covered up here. Target's less ghetto than Walmart. Yeah, of course. Walmart is the hood. Margaret, help me out with HTB. My brain's just drawing a blank. Is Target hard to borrow? Probably not. Given just the sheer volume. If it's hard to borrow, which I think is what you meant. Here's Target on the daily. Let's just look at its average daily volume. Typically, anything under 1 million shares, you're not going to be able to short. This has got, an average, it looks about 4 million. Probably 4 million shares traded per day. Probably okay. The faster this thing declines, the more likely it'll get on the hard to borrow list, but you should be okay. Yeah, that's what I thought you meant. It'll probably be okay from the borrow perspective. Just be careful out there. This thing has got a lot of momentum to the downside right now, and you could see some pretty aggressive pops back up. So be careful in this one. The volatility is definitely off the charts, and premium for those options as well. Yeah, Google Walmart customer. I think it's called People of Walmart. If you want really some fun, just go. It is. The People of Walmart on Google is absolutely priceless. I might do it from an incognito browser. Some of those pictures could be a little disturbing to you. They're bizarre. I think people literally go into Walmart just to shock people by what they're wearing. Yeah, I bet. Do it, Pepe. I want to see the Pasadena Walmart in Texas. Pasadena, Texas Walmart. I try not to go to Walmart just because it's a little too much. I actually do prefer Target. It's a little more mellow, and it's actually closer to my house anyway. Okay, so let me go back to the question that came in through, where was that one? Visa, right? Let's shift to focus here, go to Visa. So, why is it tanking like this? I'm not sure. We could speculate and point the finger at many different things. The first one comes to mind is I remember hearing something a couple weeks back about how they're going to put credit card reform back on the table, which I think should absolutely happen. I think that as voters, as consumers, you and I should be fighting for credit card reform. The fact that you and I can carry a balance of $5,000 on a credit card and be forced to pay 29% interest on that is usurious at best. We see movies on TV with loan sharks lending out at 29%, and they're like scowled upon and looked as the scum of the earth for just taking advantage of people. But credit card companies, they can do it all the time. So maybe there's something coming down the pipeline with credit card reform where they're going to have to roll back and have a maximum rate of, hell, even if it gets to 25, that'd make me feel better. But 29 is absolutely usurious. And since most people don't understand credit and how credit cards work, they'll never get out from underneath that debt. It's a really unfortunate situation there with credit card debt. So let me check out MasterCard as well. I'm going to have to do a little digging on this one. Obviously, I thought MasterCard, oh, it's MA. I put MC. So they've both been pounded over the past 2 weeks. But, look at the trend. I mean, this thing has gone from 280 to 420 in a year. All right, well, this is just really a pullback. I wouldn't say this is getting crushed or tanking. This is just a pullback. It's down from those peaks to where we are today, 8.29%. But in the past year, it's gone from 175 to 250. So a $75 increase. That's pretty significant. I think you're talking to somebody else there. Let's see. ES, rally-based rally last June, demand spot. So let me go in. Walmart south of Irvine are not that bad. Not too many weirdos in San Clemente and Aliso Viejo. Is that why you moved there, Tom? You know what's bad down there? Ross stores. The Lake Forest Ross store, I think it's like a daycare. Like, I think people literally bring their kids in there and just say, okay, I'll pick you up at noon, and just let them destroy the shelves in that place. It was chaos. I lived in Lake Forest for a while, and man, what a nightmare that place was. Anyway, let's go and look at our markets. I'll start with the indexes, work our way back from bottom to top. NASDAQ throttled today, down 1.47%. Ouch! Here's your daily. It's coming. Oops. I think that's where I wanted to keep that box, somewhere right around there. We are coming right back down to those lows that we saw on August 18th, so just a couple months back, but coming back down fairly quickly. Why is this concerning to me? It's concerning to me because the trend has been gorgeous since November of last year. Higher highs, higher lows. Well, up until, you could say the first warning shot happened on August 16th when we broke those most recent lows. We broke the lows from June. Then, okay, fine. It was just a little tiptoe below, no big deal. Then it rallied. And if the trend is still intact, we know that it should have gotten up past these highs from June 19th. Should have gotten all the way past 16,000. It didn't. And all of a sudden, it's coming right back down to these lows. So keep your eye on this one. If we do get a close below those lows, and let me put a horizontal line right on that number so you guys can see it on my screen over the next couple weeks as this goes forward. There it is. That number is 14,609. Right now, we are at 14,715. So that's only 100 points away. Right? Today was a 220-point drop. We could easily get there tomorrow. If we do break that, you've got this yellow box down below it, which I'm looking at as a demand zone. After that, you've got a big drop coming. And I think that will trigger a lot of closing of positions for long-term investors and institutions because it will have indicated that this overall big picture uptrend on the NASDAQ is broken, that it's going down. So I think, this is something you should really keep an eye on. Granted, things could tiptoe below and rip up, but it just psychologically, this chart pattern is saying markets are not as strong. They're getting a little bit weaker. This isn't collapse material. I don't want to sound like a doom and gloomer here. I'm not saying this is the end of the end and batten down the hatches, we're going to hell in a handbasket, but it's the start of weakness in our markets. And that, of course, means long positions might get punished. Short positions most likely will be rewarded if we can get down below these levels. So NASDAQ down 1.47%. S&P, similar picture, but even worse, I would argue, down 1.46% today. Notice where it fell to. I've had this line drawn in this chart for some time. It's at 4,300. We are at 43.14 right now. We hit an intraday low on today's trading session of 43.05. So we came right down to it. You better hope that holds if you're a long-term investor. You've got a small little area of demand, which is this rally-based rally. I think that's what you were referencing. You talked about that rally-based rally that we're coming back down into, skilled stocksmen. Absolutely. Absolutely. That's first and foremost on my calendar right there, or on my chart. If that's broken, then I think you're going to be looking at, getting back down to 4,100 on the S&P, and then we'll reevaluate from there. But there's definitely the higher probability, in my opinion, that we're going to see more downside movement. Granted, we had a big down day today. I do expect there to be a bounce somewhere around this demand zone, which goes between 42.63 and 42.96. All right, that's what I'm seeing out there. So all in all, if equities are down, I bet BitBoy. BitBoy, what a clown that guy is, man. Unbelievable. Here's the Russell. I am still holding my puts on the Russell. I wanted to close some today just because, again, I don't want to be greedy. I've got it. It was another really good day. This has been let's just say that the last 2 weeks have been epic for the Russell short trade that I'm in. Love it. Very happy with that one, but no reason to gloat yet because I still have that trade open and anything can happen. I've had the target here, at least for this specific one. Why is it not letting me see all kinds of weird stuff going on my chart here? Hold on a second. Why am I seeing all these grayed out? That's bizarre. Okay. It looks to be about 1825 is where I think that we, that can't be right because we're currently at 1779. We're down below that. So I'm not sure why this looks like this. Anyway, 1825 is that number that I was looking towards, but as you can see here, my candles are way off. The low is 1776, so we actually tiptoed down below that line. Probably has to do with contract rollover for the RUT futures. From there, again, we still have that measuring object for this head and shoulders, which puts my target way further down here. Something's wrong with my scaling. That's what's going on. I don't know why my scale is all messed up on the side. But it's 1650 is where. Set a conditional or trailing stop on that RUT put. I'm going to just do it manual. I'm going to kind of keep watching this. If we get down to my levels, which we don't look like we're there yet. It's kind of really strange the way this is pricing in. I'm getting erroneous data right now, which I don't like. Something's just not working, and I'm not sure why that is. But most likely doing, again, contract rollover or something. The initial thought was to take some off at 1825, but if we do keep moving through that with some momentum, then I will leave it alone and trail stop it every day, meaning I'm going to keep moving it down every day, and then 1652 becomes that target. At 1652, if we get there by October 17th or October 20th, I think, October 20th is when my options expire. That will be a glory trade right there for sure. They call BitBoy the king of crypto. Yeah, right. Yeah, that guy is a clown. I've been saying it for a long time too. Here's your gold chart. So we had this discussion a while back about the compression that was going on gold futures. And typically it goes calm, it slows down a little bit right before it breaks, and then when it does, it has a pretty violent move. Well, the question was, which way is it going to break? Because the prevailing trend was down if you look at this picture. Prevailing trend is up if you look at this picture. It's difficult to make that assessment. Anyway, we broke down below it today aggressively at a 0.87% slide. 1919 is where gold ended up today. And silver also took a tank. I'm glad I sold my calls when I did. Locked in a higher rate of premium. Getting towards the podium, but we're almost there. Here's your Bitcoin for the day. Bitcoin down 0.42%. Big news was that Jamie Dimon and JP Morgan Chase said no crypto transactions to them. They're going to start to issue their own digital currency so you can make digital payments through Chase and using their infrastructure. Again, banks are going to do whatever they can to fight this. Banks don't want crypto. It fundamentally represents a threat to their business. Bitcoin was literally created because banks were controlling people's assets and not allowing them to have access to it. Bitcoin says control your own money. So banks are going to fight that one all the way. I thought we'd see a bigger down move today because of that. And then we get to podium time. Here's your 10-year. Another little blip to the upside, although with some hesitation going. BitBoy Crypto, he's just a charlatan. He's got a background, looks like he's got a criminal background record, and he's just, got caught up in the hype and loved it. Everyone was just thinking this. He was making so much money. You're doing crypto advice. I guess if I just acted crazy and did all kinds of stupid stuff and worried about the consequences later, I guess I could do that too, but not for me. So there's your 10-year. Again, we're ticking up in the after hours. We are right now at 4.55%, so slightly above that 4.5 mark. Again, I still think we're shooting towards the 4.7. Dollar index creeping up as well today. We hit that 106.23. We've actually passed it intraday. Now we're just slightly below that 106.20 mark. We were up 0.22% for the dollar index. It's interesting because yesterday you had an up move in the dollar index and markets were up. Today you got another up move in the dollar index and markets were down significantly. So reverting back to its normal relationship. And finally, crude oil. So crude oil had this giant hammer formation. Someone sent me an email on this one. It's not really a hammer because it's in a sideways trend, right? You got it sideways for the past week and a half. I wouldn't put a lot of emphasis on that, and it would not follow my same rules that I adhere to for my hammer formation patterns. But crude oil was up 0.79% today. What it shows you is at some point this was much weaker, and people going, here we go, here's the pullback. And it came slingshotting right back up to near the highs of the day. So it's actually fairly positive for crude oil. All in all, again, I'm still bullish on crude oil. I'm bullish on the dollar. I'm bullish on the yield on the bonds. Because I'm bullish on all three of those things, I'm bearish on the markets overall. RTY, other than local banks, which stock makes the downtrend? Not sure I understand the question there. You're doing well trading RUT, so you don't need equity. No, it's not my thing. Matter of fact, I got blocked today since, I should actually just put his face on this coin, the donkey of the day. I made a comment on my arch rival, not my arch rival, just someone who I just have zero negative respect for, just telling people to do their research on who this individual is. Just dig a little bit, spend some time on the internet, and just look at these people. When you have these gurus, specifically an individual who says, I'm doing so great, I'm making so much money, and buy all my classes and spend all this money with me, you should do your research on that person. Be surprised the information you might find. So I was actually blocked today. I was like, thank you for blocking me. I no longer have to watch your ridiculous tweets. All you do is tweet out, oh, you can make it if you really try at trading. Supply and demand is the king of everything. All these little tiny self-help tweets, when the guy that's tweeting them needs the self-help himself. Let's see. Gas almost $7 a gallon. I know, it's crazy. It's breaking 6 right now where I live, and my electric vehicles and bikes are looking even better. Every time I wish Bob Dunn was around as well. He's awesome. Mike says, I'm already asked, I left the room for 20 minutes, but did you make a comment about Target and Walmart using the Costco model to stop pilferage? No, I didn't. Don't know about that one. I can't imagine them charging a membership to access the stores. That would be interesting. But even there, Mike, here's the thing. If Target was in Walmart were both subscription models where you had to show a membership card to enter the store, is it going to stop a group of 20 people who rush into that store all at once, as quickly as they can, grab as much as they can, and run out the store? It doesn't matter whether you've got a membership card, a security guard at the front door, you're still going to get hit. It's because of the lax rules. If they said, hey, if you got shoplifters, you can use rubber bullets and shoot them. Might stop a lot of shoplifting. Not real bullets. These rubber bullets just hurt people. Could you drop spike strips on the way out and deter shoplifters that way? That would be great if you could do it. But unfortunately, there's nothing you can do about it in some of these big cities because the laws are against it. You got to protect the consumer. It's like, well, how about you protect the business owner to some extent? There needs to be a happy medium there. Microsoft on the daily for less? Yes, I can do that. Mr. Softy, as Mike McMahon calls. You know what? I'm going to reach out to Mike McMahon. I got to call that guy. Les. So you tell me, Les, what do you think of this one? You know exactly what I'm going to say, right? It really mirrors what's going on with the NASDAQ, which has been a slow weakening of the NASDAQ. We're not seeing the higher highs anymore. And of course, the NASDAQ is driven by Microsoft and Apple. So if you have Microsoft making new lows, which it did today. Now, it didn't close below that the low from a couple weeks back, but this doesn't look good. I have some red lines a little bit lower. Let me get rid of some of these lines because I don't remember what we used them for. But there's a line right here, right around 280. 280 seems to be the next logical target to close that gap. I mean, that'd be a pretty big drop from these levels. And remember, given its weighting in the NASDAQ, if Microsoft falls from current levels down and closes that gap, you're looking at a 10% slide in Microsoft. And I think you would all agree that's probably going to start to trigger panic if we get down to those levels. Now, it's not just Microsoft. It's also, these are your two big dogs in the space. Look, Apple looks even worse in my opinion. Because Apple has been, this is a descending triangle, right? It's just been dropping and it's hitting its head, getting lower and lower and lower. This looks pretty bad. We are literally at that moment right now where you got to tell yourself, if Microsoft and Apple don't bounce and rally up from here, if they drift lower, it's going to trigger more selling. Sorry. it's just going to trigger more selling. It's just what's going to happen. It's just the way that these markets work. It's not moving up anymore, so people who are long, especially institutions, are going to say, all right, we'll close our positions, maybe even start opening some shorts. And you do have a gap that should fill going all the way back to 165, which would be a $6 drop from current levels. That's about another 3%. And again, I absolutely am not trying to spread fear. It's just opportunity, right? And again, I'm making trades that are bearish at the moment. Now, granted, I did sell some puts on target for 105, so I'm going to be long, most likely target at 105. I had that until October 20th. If I don't get there, great. If the markets start to fall from here, I'm totally fine with that as well because my bigger position is short. Just no reason to long. Yeah, not right now. I would say I'm probably not going to want to go long there. Great. I sold calls, 150. There you go. Should probably be all right on Microsoft. On Microsoft. No, that wasn't for Microsoft. Okay, XLK. Yeah, XLK. Remember, XLK is just more targeted. XLK is more tech firms. It takes out some of the biotech ones. So should be fine. Should be fine. All right. I think it's a bounce tomorrow and then back down by Friday. I kind of agree with you, Richard. I agree with you. I do think that I actually thought we were going to have a bounce on Friday. But, you know, we are due for a bounce, especially at these current levels. All right. So wants to see the economic calendar. Let's do it. There was some bad stuff that happened today. Let me start there. If you look at what happened on Tuesday's calendar, your Case-Shiller Composite 20 Home Price Index, that was great. It was actually going positive. Price is moving up. What wasn't good was the new home sales. Right, this got a lot of attention. It's the first time in a while we've seen new home sales miss like this. It was supposed to go from 739 to 699. Came out at 675. And here is the chart of it. We were trending up, looking great. Now all of a sudden it dipped down once. It's only 1 point data, so let's don't freak out yet. But it has a lot of people going, uh-oh. Rising mortgage rates are impacting these new home sales. And I would agree that's most likely going to happen. But you know, one thing that home builders are great at is offering incentives in a rising rate environment. So as rates go up, they realize it's harder for people to qualify. So what they do is say, hey, we'll give in a hot tub and we'll give you an extra car garage spot and a giant pool out in the backyard. That's your incentive to buy today. And you're like, oh, okay, I'll do it. So if those of you looking to buy a new home through Toll Brothers, Lennar, or KB Homes, might get some good deals here soon from incentive perspective. Wednesday, what do we got cooking for Wednesday? For the U.S., you've got durable goods orders and crude oil inventories. That's pretty much it. If you're trading the euro, you have preliminary CPI numbers coming out. And then also for the Australian dollar, you have retail sales numbers coming out tomorrow, which are expected to slide as well. All right, earnings front. Do I have anything interesting with earnings? Let me bring that up real quick. I didn't get a chance to look. Busy working on my trivia rounds. I got some great rounds for trivia tonight. I have to put my hint out there in a few minutes. Micron Technology and Paychex. Those are your only real two big names reporting earnings tomorrow. So great. Thank you all for the comments, questions, feedback. Thank you to Tom for your feedback on Target. Thank you for Tim as well. Bottom line, everyone, make your own decisions. Take all the information. Be objective as well. In many cases, what we do is we put our overly strong opinions on something and we almost will it to do what we want it to do. That's wrong. I always encourage people to take a pad and paper like this and put a plus on one side, a minus on the other side, and whatever your argument is, come up with pros for it and cons against that position and try to come up with a balanced opinion about what's really going to happen. If I look at Target, I think you're going to get short-term volatility. Could it go lower? Yes, but I don't think it's going to be an implosion. I don't think you're going to see Target disappear. I think they'll be fine in the long term, but again, that's just my opinion. Take it for what it's worth. Guys, thank you so much for today. I hope you enjoyed it. If you have any comments, questions, feedback, hate mail, please feel free to send them on in at TraderMerlin@gmail.com or down below any of the YouTube videos. Hopefully we're making some changes to my YouTube channel and making it a little bit more professional looking. I need to take that step and make Trader Merlin a little bit better looking and maybe have some announcements in that regard coming up here in the near future. So thank you guys. Tomorrow's show, no guest. We'll see what happens. Probably driven by your comments, questions, and feedback. So send them on in. I will see you guys tomorrow. Take care.